Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Hello everyone, checking back in on SPY daily, weekly, shorter term time frame. So we're continuing to consolidate inside candlestick after inside candlestick. This is the tightest SPY has been in months. And we're going to see a clear break likely tomorrow. A break of 226.02 is bullish. A break of 225.08 is bearish. And as you can see, the range is now within or less than $1. So a break is coming. If we get a bull break, we're looking at the all-time high, which again, Stock Charts has adjusted for the dividend distribution last week. So the all-time high here on this chart is 227. Now we know SPY is hit up in the 228s, but I really like how Stock Charts does this because that dividend distribution caused a artificial drop in the price on the chart. So this has factored in for that, and in my opinion, if we break 227, it's the highest price SPY has seen with that dividend factored in. If we make a bear break, we're looking down at the low of Fed Day, 224.04, and a break of that level would indicate further consolidation, and it would likely confirm the bearish reversal doji on the weekly time frame. We are still holding the upper Bollinger Band on the weekly of 225.54. If we lose that level and see a red week, that will be confirmed, and again, it will be normal, healthy consolidation as we have been in a breakout for quite some time, and we haven't seen 2 red weeks in a row. So it wouldn't be any kind of big red flag for the bulls by any means unless we were to pull all the way back down and break 217.87, the low of the last red week. But we're well above that level at this point, and the bulls are still in full control. We'll see how we get that tight break tomorrow. On the shorter term time frame, SPY had a tightening range form where we had a bull start to the day, big 15 minutes, consolidated, nice continuation. Then the bears stepped in. Look at how these moving averages came out into play today. 200 period 5-minute held as support. We saw a bounce. The 100 period 5-minute held as support 3 times. A little bit more continuation to the upside. And then this is where the bears took over because we broke the higher low pattern. So as soon as we broke this low here of 225.46, that higher low pattern was broken. And then the bears took over, and we saw some weakness into the end of the day. A little bit of a bounce, but not very significant. The bears had control for the second half of the day, and that is the tone we're going into tomorrow with. The hourly time frame wasn't very useful today, and that's because the 100 and 200 hour moving averages are so spread out. We weren't anywhere near those levels. We bounced off this 20 period 3 times. That was definitely a key level to be watching. But in terms of these moving averages, they're going to have to continue to tighten up until they become a factor into our analysis for the shorter term time frames. So tight inside candlesticks worth watching tomorrow on SPY, and whichever direction we break will indicate which plays we're going to be looking at. We have a couple bear plays we're going to be watching, CMG and the banking sector if we get a bear break in the S&P 500. If we get a bull break, Amazon and Apple are still strong, and a lot of other bullish names to be keeping an eye on as well. So I appreciate you watching. We'll see which direction we get, and we'll check back in tomorrow after the close.